Welcome back to the Loveland Report and the Lone Ranger Show. I am Cleve Loveland alongside Bruce Woodburn, giving you all of your real estate news. No fake news here. Bruce, I want to ask you a couple questions.
Sure.
One thing we've been doing, this is why you hire a realtor. Most people hire a realtor. Sometimes it's for the paperwork. It's for, ease. They're not local, whatever it might be. But 60% of the time, national stat, 60% of the time, they want somebody to negotiate for them.
Yes.
And we've been negotiating a lot of closing costs for our buyers, actually, in the past 2 months. It's been happening. So we're getting back to the point
sellers are willing to pay.
They've been on the market for 45 days, and we bring them a full price offer. But wait, we asked for $8,000 or $9,000 in closing costs, and the seller's like, "What?" I'm like, "Well, you got any other offers that are better?" And they go, "No." "Okay, sign our offer." And so it's happening. Can the buyers use that money to maybe pay a discount point and get
Absolutely.
the rate down a little bit?
Absolutely. So and you're going to see that today more than ever before in the history of my 33 years in this business, a lot of loans are not available without points.
Yeah.
Where it used to be where here's your zero origination, here's your 1 point origination, and here's your one with the 1 point origination credit. Credits non-existent.
Well, you explained that very well. You said they're not going to do that because Wall Street knows you're going to refi it within a couple of years.
That's right. So the market knows that rates will come down.
So they want a little piece of the action up front.
Well, no, they know that the loan won't pay off over a long period of time.
Yep.
I mean, it won't pay out over a long period of time.
Yeah.
It will pay off, and therefore their interest will be reduced, so they're going to collect the interest up front.
Yep.
That's why everybody's paying points. But what happens is the federal government, back when QM came into play at 2010, and said that lenders could only charge a maximum of 3% for all costs.
Total, yeah.
Total. So if you just to get a loan costs you 2 points right now, how do you buy it down even more?
Yeah.
Right? Can you buy it down to 3 or 4? No, because most lenders are going to have a processing fee and a doc prep fee, and you may have tax service fees and things like that have to be charged. So you're already over. So there is a way to do it. And in the past, we would have the realtor say, "Hey, pay, 2.5% towards closing costs."
Yes. Mm-hmm. Of the sale
Nowadays, you would say the seller has agreed to pay 3% towards closing costs, but 2% of that is to be used towards points or origination fee. And if it's worded that way, then you can go above the 3% rule because the seller's paying it. But if it's not, the verbiage is not in there and it just says seller agrees to pay closing costs up to this amount, you cannot use it to exceed that 3%
So you could ask
rule.
for 2% of the price towards closing costs and 2% towards discount points.
You could.
Okay, all right.
You absolutely
so
could.
we can get over 4% of our price. Okay.
You could.
Did not know that.
You absolutely
That's
could.
why I hang out with smart people like you.
But that's the only way to do that, because otherwise you're capped at the 3% rule.
Another thing really important, I think, go into Fast Track real quick. Tell people, because it's still important. I'm getting offers, and I still don't have a darn I don't even send a pre-qual letter.
It's amazing how many people are willing to, and realtors too, willing to have a client sit in their car, drive them around, look at property, and not have a full-blown loan approval. So my Fast Track is a giant leap beyond a pre-approval letter. Pre-approval, I've pulled credit, I've seen your W-2s, I've seen your pay stubs, and I know where the money's coming from for cash to close. A Fast Track is a full underwritten approval, meaning I've taken that loan because, pre-approval letters are written by loan officers, right? Like that's like the fox watching the chicken house, right? So they're written by loan officers, but a Fast Track is underwritten and approved by an underwriter. So that's who's ultimately going to be underwriting every loan that anybody gets anyway. So rather than waiting till you have made an offer on a house, ordered the appraisal, ordered and paid for the home inspection, then the loan officer sends it to processing, then the loan officer's processor sends it to underwriting. Hell, could be 3 weeks after you're in contract. Why not have that done in advance of even finding the home?
Yeah.
Then you find the home, you order the appraisal, and you're good to go.
Yeah.
You wait for title to come in.
Yep.
It takes me about 2 days for title. You're good to go. If you have questions and you'd like to entertain having the strongest possible offer to present to a seller, you call me about Fast Track, 407 250-9144 or webringyouhome.com. It's the best way to approach a new loan. Now, I want to talk about Hometown Heroes. Hometown Heroes, up to $25,000 in government down payment assistance for heroes, police, firemen, teachers, educators, anybody that's certified, healthcare workers, certified in those industries.
What about retired law enforcement?
You have to be active full-time in that.
Right.
Yeah. Only a veteran.
Got a pension. Okay.
Yeah. Not even a pension.
Okay.
If you are not active in that field right now full-time.
But a veteran can do it.
A veteran is the only one that's exempt, and a veteran doesn't have to be a first-time home buyer. Everybody else does.
Yeah.
Okay. But up to $25,000. I taught a class this Wednesday. Blew it out. I mean, I'm helping a lot of folks. They're getting over the higher interest rate because they see the benefit in getting into the home now. Now, it has advantages and disadvantages over other down payment assistance programs. It allows you to make 150% of the average median income, which the 150% gives me about $124,000 in income, where if you look at, like Orange and Seminole County, you can only make like $64,000 in the whole household. So it allows you to stretch that. Now, the downside to Hometown Heroes is the money does have to be paid back, but not until you finish paying the mortgage off, sell the house, rent the house, or it's no longer a primary residence.
Yep.
So some people go, I don't know if I want to do that because then I got to pay 25 grand back. Okay, let's just do the math. So I put the math in a chart. If you buy a home for $375,
yep,
and it goes up by 5%,
yep,
you have had enough to pay the $25,000 off in about a year to a year and a half.
Yeah.
So,
but you're in the home.
You're in the home, and the home went up more than the $25,000. Yep. So by 5 years.
Well, it's kind of like we talk about leapfrog to buy a house. Don't empty your savings of 25% to cash flow on an investment property. Buy your primary.
Right.
1 to 2 years afterwards, we buy another primary, rent
Correct.
the old one. At 1 to 2 more years, buy another primary. You've got 2 rentals. You've got 3 houses worth over $1 million that your tenants are helping pay off 2 of them.
They're absolutely. Matter of fact, in our Leapfrog program, which I think we're gonna do a home buyer class, and we're gonna entertain Leapfrog in it on August the 17th from 6 to 7:30 at Miller's Ale House. Go to webringyouhome.com. Cleve and I will show you how to do it, how to make them and maximize the amount of properties you can purchase, make the most possible money on it, retire with generational wealth. And when I talk about this is, listen, how much are we charging to get in this? $1,500, $2,000 to get in this class?
Isn't it like the $10 for the food or $15, $20?
Yeah, right. So listen, most of these seminars you guys go to that you get caught up in, and you buy the CDs and the 8-track tapes in, and you buy this fancy booklet that tells you how to buy real estate. Cleve and I are going to do it for free.
Yeah.
Okay. We're going to show you how to do that for free. It is listen, I'm a 10th grade dropout. I did this. I created this program, and it works famously. And I'll show you how every one of those properties will be paid off within 20 years. And you'll have $25,000 a month in income coming in. It's a no-brainer, you guys. It's a no-brainer. Other people are putting your 401k money in, your IRA money. This is your equity. This is your retirement. And then it pays you dividends. So I'll show you how I did it. I'll show you the mistakes I made. I'll show you the successes I had and how to implement the program immediately. You just call me at 407-250-9144, or you can call Cleve
407-352-8118, or go to lovelandreport.com.
Yeah, or register for the class right away. There's only about 35 seats in this room. Small class. But Cleve and I like the smaller venues. We can really get down and dirty and personal. Don't bring the kids to this, please. Get a babysitter, because this is going to be learning this program. I prefer to have no distractions. There's going to be food and drink involved. And we really want you to only register for this class if you're serious about either buying your first home or investing in multiple properties. It's not designed for people that just, hey, I just want to come to Ale House and eat some spaghetti and have a cold beer.
No, I mean, it's just you and I we made lots of mistakes. I've owned investment property for 27 years, and my I think the biggest mistake, I'll give away a little bit, I sold my first 3.
Right.
I sold the first 3 homes I had. I should have kept them longer and or 1031 them for bigger, better homes. I had, I had a couple dogs that had a lot of repairs. Appreciation wasn't great in the neighborhood, and I should have just 1031 them to different neighborhoods.
Yeah.
So
I should have. You're right. And 1031 exchange, we can talk about that if you have any questions about it. We can talk about construction perm lending, rehab loans, reverse mortgages for the elderly couples. I had a realtor call me today. She says, I want to learn about your reverse mortgages for 55 plus. Well, first of all, you can't get a reverse mortgage until you're about 65.
Yeah. I thought it was 62. 62.
It might be 62 and a half,
All
right? Okay. But it's, and there are, you can do it, but
so if you are 55, you need a sugar daddy or a sugar mama.
Well, here's the thing. When you're only 62 and a half, it makes it very challenging to do it because the risk factor is more, and they are based on a reverse of risk.
Yeah.
So the older you are, the more attractive they are.
Yep.
Now listen, here's the deal with the reverse mortgages. For all of you that are hearing me out there, the loan arranger, 33 years doing mortgages. Okay. I'm going to tell you right now, I'm not really big on reverse mortgages. In other words, most of the people I talk to, I don't think it's the right thing. I think a lot of you are sold a bill of goods by fancy, good-looking, retired movie stars that are selling the product, and they say that all of the things are, all the old stuff is not true. Here's the thing about a reverse mortgage. I do believe that most people that want it shouldn't have it, but there is a small segment of the market that I think should have it. So, for instance, if you really are struggling to live today based on your cost of living and you have a ton of equity, but you really have no means of refinancing it and pulling equity out of it, it might be the right thing for you to do. But keep in mind, when you die, the bank gets the house.
No, they don't.
Okay.
They don't. If you got equity.
If you have equity.
If you have equity. Now, it's non-recourse. I know that.
Right.
So, but if you've got equity, your heirs would get the equity. But if your heirs aren't letting you live in their back guest suite, but if you got a reverse mortgage that started out at 300 and when you die it's 450, but the house is worth 650, the kids will split what's left. And let's say the house for some reason was in horrible shape and it was only worth 450, there's no recourse and they get it back. Well, so I did in my financial planning classes that I'm in, I heard a lot about that. But it is that's what you and I do. We figure out what's right for people and help them plan for their next mortgage. I'll help them plan for their next house and what's right for you guys. Also, they can go, I always tell people, go consult with your financial planner and let's see what's right.
I just think that there are other options, and reverse mortgages are very expensive too. So there may be other options. So if you have a question about it, give me a call. We got a full department, 407-250-9144 or WeBringYouHome.com. Register at WeBringYouHome.com for our class. I'm also doing a realtor class for mortgages and mortgage strategies. So if you're a real estate agent and you don't know mortgages, FHA, VA, USDA, down payment assistance, PMI, then I'm going to teach you. I'm going to teach that class on Friday, August 5th. And that, I believe, is going to be in Claremont at the Outback Steakhouse at 11:30. So register at WeBringYouHome.com or call or text 407-250-9144.
All right. And how much time we got?
We got about 30 seconds.
Oh, okay.
A minute.
Cleve, Loveland, 407-352-8118. One thing I'm getting done right now, Bruce.
What's that?
I'm getting sellers to take contracts contingent on a closing.
Isn't that amazing?
That's unheard of, yes, in the last 2 years.
I'm getting contracts contingent on closing. I'm getting seller paid closing costs. Nobody's paying over ask price that I've had in my pipeline right now that wasn't already in contract. And they're being a lot more flexible. And I think they better be.
And that's the thing.
Which gives the first-time home buyer an opportunity.
Well, let's talk more about that in the final segment.
Yep. So just stay tuned. We'll be back for our final segment of the Loveland Report and the Loan Arranger radio show with Cleve Loveland and Bruce Woodburn, the Loan Arranger. If you have questions for Cleve, he can be reached at 407-352-8118 or the Loan Arranger at 407-250-9144 or WeBringYouHome.com. I'll be back in 5 minutes. Stay tuned, please.